And in business, the Bank of England has raised interest rates again as it seeks to tackle soaring inflation. It lifted its base rate by half a percentage point to 2.25%, and that's a 14-year high. This marks the seventh rate increase in a row. It is one of the major central banks to hike rates after the Fed raised borrowing costs by 75 basis points. The 10-year gilt dipped sharply following the BOE's hike. And while the sterling slid against the greenback to below $1.13 per pound, it hit a 37-year low following the Fed's decision last night. The latest rate hike, of course, comes amid a tumbling pound, recession fears and persistent cost of living concerns. Inflation in the UK dipped slightly in August, but is still well above the central bank's 2% target. And Giles Gibson joins us live right outside the Bank of England in London right now. Giles, the Bank of England has raised rates despite worries of looming recession. Will the higher rates affect households and businesses? How will it affect it before inflation finally under control?
Well, the Monetary Policy Committee in the Bank of England just behind me were split on how much they should raise rates. The majority, of course, going for that 0.5% raise. There were also three members of the committee who wanted to go much further to raise rates by 75 basis points, and actually one who wanted to go a bit less at 0.25%. All of this, of course, is aimed at reining in inflation here in the UK, which hit 9.9% in August. The Bank of England is now saying in its latest statement that they expect inflation to peak in October at just under 11%. Interestingly, they also name-checks the government's plan to cap energy bills for households and businesses this winter. They're saying that that plan is going to bring inflation lower and bring forward the expected peak of inflation. As for the effect on households of all of this, well, of course, if interest rates go up, then it gets more expensive to service any type of debt. So anybody who's got credit card debt, anybody who's about to remortgage their house, renegotiate their mortgage, they are now going to be paying more per month than they were before.
And we've heard that U.S. Fed Chair Jerome Powell saying that more rate hikes are on the cards. Now, based on his latest comments, could we see the same from the Bank of England?
Yeah, this is just an international trend that we are seeing, really. Just this week, the Fed deciding to raise interest rates by 0.75%. We're also expecting the European Central Bank in Frankfurt at their next meeting in October to do exactly the same, to raise interest rates by 75 basis points, reversing their policy that they've had for many years of actually keeping interest rates in negative territory. When you compare the different central banks, the Bank of England actually started raising rates earlier, but it has also been a little bit less aggressive than what we've seen in Washington from the Federal Reserve. But we can certainly expect more rates rises in the coming months from the Bank of England. Also just worth noting that Kwasi Kwarteng, the new British finance minister, he's going to unveil details of what's been called a mini budget on Friday. We're expecting to see some more details fleshed out, really, about how much borrowing they're going to need to do, extra borrowing to pay for that massive intervention on energy bills this winter. And of course, it's the same for governments as it is for ordinary households. The higher interest rates go up, the more it costs you to service your debt.
Thanks, Giles, for those details. Giles Gibson, live from London.